What's up guys, this is Danny from Rethink Peer-to-Peer Lending. Welcome back to yet another portfolio update on my channel. In today's video, you will find out on which lenders I have increased my exposure by 4,000 euros in December and whether I will continue to invest on PeerBerry and Crowdpear despite decreasing interest rates. Overall, I was able to earn 863 euros from my outstanding peer-to-peer portfolio in December, which is the fourth highest income last year and historically. A new record in terms of my personal income from individual peer-to-peer platforms was achieved by Debitum investments with 57 euros. Debitum is also delivering the best overall performance in my portfolio with 15.94%. This performance is still somewhat influenced by the initial cashback bonus, which is why the return will go down by a few percentage points in the coming months. The second best return comes from Income Marketplace with 13.21%, followed by PeerBerry with 12.05% and ViaInvest with 11.17%. On the other hand, the worst performance in my portfolio is delivered by Estate Guru with 6.03%. In December, I had a total of 3 transactions in my portfolio. In terms of deposits, I added 4,000 euros to Income Marketplace. Of those funds, 2,000 euros have been attributed to loans from Ibanka, which conveniently offered a special campaign with interest rates of up to 12.5% at the beginning of the month. The other 2,000 euros have been allocated to loans from ITF Group. Apart from my previous experience, my decisions are also based on a recent analysis of the individual lenders on Income Marketplace, as well as a conversation with Income's head of loan originator due diligence, who has been responsible for checking the quality of each lender since the inception of the marketplace. My investments on Income Marketplace have partially been cross-financed by a withdrawal from Esketit, where I withdrew 2,000 euros due to ongoing cash drag issues. In addition, another 150 euros have been withdrawn at Profitus. In December, the value of my outstanding peer-to-peer portfolio increased to 109,947 euros. Next up, let's talk about the performance of some peer-to-peer platforms in recent weeks. On PeerBerry, investor demand is still exceeding the available loan supply. Unsurprisingly, PeerBerry lenders have therefore lowered their interest rates again. The next adjustment could be a crucial turning point though, as the new conditions only have a maximum interest rate of 9%. Considering my current loyalty status, my expected return is now capped at 9.75%, which is below my anticipated target of at least 10%, which questions my future on the marketplace. In the end, I decided to stay invested for the time being though, and those are the 3 main reasons for it. Firstly, PeerBerry has been a core pillar in my peer-to-peer portfolio since June 2021, while being also my biggest position since September 2022. Right now, I wouldn't know how to reallocate the money that will return over the next few months without creating a major hole in my peer-to-peer portfolio. Secondly, PeerBerry delivered a total return of 12.05%, which is why the platform has built up a kind of buffer to be more forgiving for lower interest rates. As long as the total return remains in the double-digit range, I can therefore temporarily accept lower interest rates. And thirdly, there is of course a small hope for increasing interest rates in the future. Whether because the investor demand decreases substantially or maybe some other unforeseeable events will happen again. Although my investment on PeerBerry will continue, at least for the time being, the situation also showcases my strong dependence on the Croatian marketplace, which is why a couple of withdrawals might be a consequence in the upcoming months. On Esketit, many investors are facing a similar issue with a lack of loan supply. As a result, the active portfolio on Esketit has been declining since September 2024. In addition, there also has been a noticeable lack of communication in recent months about how the platform intends to boost loan supply again. By contrast, the portfolio under management at Income Marketplace grew from 18.1 to now 19 million euros in December. The marketplace was therefore able to continue its positive trend despite falling short of hitting its annual target by just under 1 million euro. If you are interested in assessing the different investment options on Income Marketplace, I highly recommend to navigate to my blog where you can find tailored analysis of each lender. Last month, Lande was able to finance 1.4 million euros in loans spread across 46 different loans. In addition, 1.16 million euros in capital and 153,000 euros in interest have been repaid to investors. All those numbers correspond to monthly record amounts on the platform. In contrast, little progress has been made in terms of recoveries. Instead, 4 new loans have been now added to the collection status. If you're interested in joining Lande, the platform has recently prolonged its 3% cashback campaign for new investors. Similar to PeerBerry, also their spin-off Crowdpear is now starting to reduce interest rates. Without a loyalty status, a 10% interest rate is in most cases only manageable by investing at least 2,000 euros in a single loan. Unlike PeerBerry though, I am not prepared to go along with this trend, which is why I haven't reinvested on the platform for quite some time. As a result, 1,250 euros of uninvested funds have already been withdrawn in the month of January. If you are looking for competitive interest rates, Debitum might be an alternative worth considering. In December alone, another 3.6 million euros have been financed, increasing the platform's managed portfolio to now 27.4 million euros. The platform's annual recap video is also worth watching, even though the claim of having a 0% default rate was mentioned way too often with regard to the outstanding loans in Ukraine.
And maintaining a track record of zero defaults.
And upholding our 0% default rate.
Our greatest achievement has been maintaining a 0% default rate.
From my perspective, the platform doesn't need to market itself this way. Defaults are a part of investing, and a more proactive approach would command even more respect from my side. Nevertheless, the platform remains a big contender in my personal peer-to-peer portfolio to increase my exposure in the 5-digit range in 2025. That's a wrap for the first portfolio update of 2025. If you enjoy this kind of content, then please do me a favor and consider subscribing to this channel to not miss out on any future videos, and also check out my Telegram group if you want to stay up to date with the latest news from the industry. Thanks for watching, and I'll catch you guys in the next one. So long. Bye bye.